Also with us is Frank Ingarra, portfolio manager at Hennessy Advisors. Frank co-manages the Hennessy Cornerstone Value Fund, which is ranked in the top 1 percentile over the past year. That means it's beat 99% of its peers. Not bad. Frank, I want to start with you here. On a day when we see consumer discretionary stocks taking a big hit, it's good to have you on. What's going on today?
You know, I think there's a lot of noise going out there, a lot of headline risk. As we've been saying, the markets are trading sideways. You know, right now, I think a lot of people, at least in the short term, are focusing on the Russell rebalance that started today and will go on through tomorrow.
We did get a lot of disappointing news on the housing market. Did any of that just, you know, remind you that things are still bad out there, or did it in any way kind of change your economic outlook?
They didn't change our outlook. I mean, we know things are bad out there with the expiration of the tax credit. We knew that the numbers were going to be down. You know, right now, people have to focus on the positives. You know, companies are sitting out there with record numbers on their balance sheet. And what we need to propel us forward is clarity from Washington on financial reform, how that's going to affect the credit in the markets, energy reform, taxes, and healthcare, how those costs are going to affect us. That's what we need to move forward.
Now, Frank, it's Dominic here. It's good to see you again. Got a quick question for you. You guys are, I mean, Hennessy Advisors, you guys are what we call model stock pickers. That is, you guys develop these computer-driven models to kind of help you guys select stocks. I'm curious, in this environment, you've beat 99% of your peers. What are your models telling you about where to put money right now?
Yeah, in our Hennessy Cornerstone Value model, Dom, that you know of, it's put us into a lot of consumer staple names, which should do well if the market pulls back, which we think in the short run it will. And you know, consumers are retrenching again. They're only spending on necessities. In addition, we have some consumer discretionary names in there that are benefiting from the trade down. People are still spending a bit, but they want to look for more value. Some stocks that we have in particular are limited brands. You know, they've taken out a lot of costs in their infrastructure, and that's helped their profitability. And they have a pretty good yield, up over 2.5%. And then Mattel. I mean, you know, I have 2 kids, and I'm still going to buy them toys, and they're sitting on records amount of cash. We think eventually companies are going to, once they get clarity from Washington, they're going to look to return profitability to shareholders, whether in buybacks or increasing dividends.
Frank, you have your money in stocks that provide stuff you need to buy for your wife and kids, basically. Limited owns Victoria's Secret and Mattel, the toy maker. Yeah,
basically, I do it on both ends. I pay to buy the stuff, and I invest in the stocks.
I'm just curious. I mean, well, you seem fairly bearish on the economy. I mean, do you see a double dip? Are you concerned about the economy or the housing market in particular coming down again?
I'm bearish on the short run. I think investor sentiment is pretty negative, and investors are going to retrench. And I think the way we're going to get through this is, you know, by at least the election, we're going to get some clarity on what's going on, whether that's a huge change in the House and the Senate, and a lot of these regulations won't pass. Or, you know, I think basically companies just need to know the rules that they have to play by and what the credit's going to be and what the availability is going to be, so they'll start spending. You know, I'm bearish in the short run, but in the long term, I'm bullish. I mean, I think the U.S. economy has weathered a lot of storms and can do this too. We just need to know the game rules.
Frank, it's Julie. Since we just had those Oracle earnings out, I want to ask you about technology. It looks like those numbers are looking good, and I'm curious if tech is an area you're looking, as so many investors we've been speaking to are.
You know, we're relatively underweight because of valuation metrics. They tend to be a little more expensive for us, but it kind of fits into our overall theme. You know, companies, again, maybe aren't spending the higher. They're just kind of retrenching. They have a lot of cash on the balance sheet. I think technology could do pretty well going forward because they're going to have to upgrade systems, and if they're sitting on cash, they might as well use that instead of hire people. You know, they don't have as many issues just upgrading their technology and keeping up with any demand that increases.
That's a decision, by the way, hiring people or paying dividends that a lot of companies are going to make soon, right? Or do they just continue to sit on cash?
Well, they're going to need to, because, you know, they're earning nothing on their cash, and shareholders either are going to demand it, or, you know, demand for products are going to go up, and people aren't going to want to wait, you know, extra months to get their product. So that's going to be something that I think is going to come to fruition rather shortly.
All right, guys, we're going to leave it there. Hey, thanks so much. We've got Frank Ingarra joining us here, portfolio manager at Hennessy Advisors.